Welcome back to another episode of Download with Joe. As always, I'm with Joe, founder of Amador Consulting, and I'm Lewis, founder of LMC. Excited to bring a new episode with another special guest, and we welcome Scott into an episode. Scott, how's things?
Very well, thanks. Good to see you both.
Hi, Scott. Nice to see you.
Most who know you will know that you've had an incredible career, continue to do so. I think there's still some more in the tank. But for those that don't know Scott Sidman and what you did at Building Engine, can you run us through just a background of that?
Yeah, I'd like to think I have a little bit left in the tank. We'll see. We'll see how much is left there. Sure. So I'll start, I guess, with my background. A little bit of a non-linear, untraditional background, I guess, in terms of technology and PropTech. For me, I started my career actually in hospitality, which is not the usual jumping off point. I think people in PropTech or real estate. I worked for Four Seasons Hotels and Intercontinental Hotels, and then embarked on a bit of a entrepreneurial path and journey, starting and running a few service-related companies, one of which ultimately directly led to my stint at Building Engines. And I only had one, prior to Building Engines, I had one stint in a technology company that was interestingly something that one of the Building Engines co-founders started and brought me into. So I had very limited technology experience coming into Building Engines, but the longest section of my career was at Building Engines. I was there for about 18 years. I was hired initially as a consultant. Joe can relate to that, to help figure out go-to-market strategy for a startup company and how to sell into the commercial real estate space. The founders didn't have a lot of experience. One of those service companies I referenced in the past actually sold to commercial real estate companies. So I understood who they were, what the value drivers were, and who to go talk to, which doors to knock on. So I consulted for a year, started in 2003, just under a year. I really liked what the company was doing. I really clicked with one of our co-founders, who ended up being one of our longtime CEO, David Osborne. After about 8 months, he offered me a full-time position, and I was really excited about what they were doing, about the potential in the market, leveraging technology back then, just the internet, using the internet to change the way that buildings were run and operated, and stayed on. And my career there spanned primarily sales and marketing leadership roles. So, beginning with selling, actually going out and selling the product. I was the first salesperson in a sense for the company, but then hiring sales teams, figuring out how do we go to market, and then incorporating in marketing. Probably the most impactful part of my career at the company was as our chief marketing and strategy officer, and then kind of wrap things up in my last 2 years, as you mentioned, leading M&A, corporate development, building a corporate development team to make some acquisitions for the companies prior to our exit. That was the quick background on my career there.
And maybe give us a quick intro. I mean, Building Engines is now part of JLL, work order, kind of facility management software, but maybe give us a little bit more on just, I know you're not there anymore, but just for those who are unfamiliar, a little quick pitch about Building Engines.
Position is exactly right. Started as a work order system. So the product, our first product when it was built, was simple work order management system, right? Again, using the internet to automate that historically manual process or telephone and fax-based process way back in the day. But today it's a full-fledged operating platform for commercial real estate. And if we think about the tech stack in the commercial real estate environment, there's, after you acquire a building during the operating phase, there's accounting and leasing, but then there's that operating layer, and a whole bunch of things fit into that structure. But over time, Building Engines built out a comprehensive and broad operating layer for the property, encompassing 14 to 16 functional operational modules that they either built or acquired that all work together and then integrate with a host of other things. And we sold that primarily owner-operators, third-party management companies. Our sweet spot was multi-tenant commercial office buildings, industrial, and by industrial, we mean warehouses typically, and then retail. And we did that very successfully over 18 years. Prior to exit, we grew to where we had about 1,000 customers. We were in over 3 billion square feet around the globe. So some pretty good scale. I think in our category, we were the largest provider of that particular suite of services at the time. And what started as a bootstrap, owner-funded, small friends and family round that carried us through for 15 years on less than $1 million of invested capital, moved into a 5-year period of private equity-backed growth. We sold a majority stake in 2016 to a private equity firm, carried us through for 5 years. We essentially tripled in size and exited in 2021 with a sale to JLL in a managed process, but JLL was the ultimate bidder. We sold for about 320 million in cash at that time.
I don't know whether it was fully announced, but maybe it has been, but I saw around $300 million. Just before we jump into things, how difficult was it during the whole acquisition phase? Because I imagine, given your role in the business and being there for 17 years pre-acquisition, you must have played a pretty pivotal role in continuing to make sure, one, the business is running smoothly, but then also two, you're being influential in getting things over the line.
Yeah, it was an incredibly difficult period, certainly stressful, although I played a part in it, as did our executive team. Our CEO, Tim Curran at the time, led the majority of the effort with our private equity sponsors and backers, Wavecrest Growth Capital at the time, but we all worked really hard on that. And you're absolutely right. We were, as you're, operating the ship and trying to manage everything at the same time, it's difficult. 7-day a week, 20-hour a day effort for a year. Although we had a banker, we had a lot going on. In addition to all of that, we were going through a product rewrite at the time. So we had rebuilt our product from the ground up starting in 2020, or a little bit before that, but it was underway. So we had continuous development. We had migration of existing customers off of the old product onto the new product. And there was a lot happening, but you just get it done. You figure out a way how to do it. And we were very fortunate in that we had a great story, clearly benefited from market dynamics. The timing was right. We sold the company at the right time. We were all cognizant of that. But we had a really professionally run business with very good people leading the effort that helped contribute to that successful outcome.
And I guess the other point to add, in addition to everything you just described, there were some acquisitions that you did to bring. I mean, you mentioned this generally as of the 14 to 16 functional categories you served, some built, some acquired. There was also the dynamic of you were out there looking at different pieces of puzzle pieces, if you will, in the market, which in and of itself is probably a full-time job.
Yeah, that was a key part of the story for us. So it both contributed to how we thought about the exit and where we thought we could create value for a potential acquirer, right? And in addition to how we grew our own business, because at the end, you never know if you're actually going to sell. So we still have to think about growth. We thought about it in terms of organic growth, like how well we continue to do in terms of executing from a sales perspective and growing our business with the way we always had. But then we also looked at it in terms of, well, what do we need? If we're thinking about it from a build, buy, partner perspective for product, where does it make sense to look at acquisitions as a way to fuel growth and plug in some gaps? And then the other contributing factor there is market dynamics. And one of the things we understood clearly from talking with our customers, although there was incredible promise in PropTech in terms of the solutions out there that can help them, there was also frustration because there were so many products. Yeah, and right. And that's an ongoing problem. So we were thinking about how do we help solve that for our customers? And where I referenced that operating layer before, it's like we knew we can't do everything. And there's really great point solutions out there. But if we think about what makes sense for us to acquire to plug into our tech stack that fills a gap that our customers in the market needs, that's great. And that's what we should look at doing. And then where is the market heading in terms of what they need? So Joe, you and I know that we spent a lot of time looking at things like energy and sustainability and how that all fits into the facility management equation as well. So yeah, I was at the time, we had mapped close to 3,000 companies and we're tracking them. And we made 5 acquisitions during that period.
Yeah. So 3,000, I mean, we had James Dice on recently, and he noted that their smart building universe is about 700-800 companies. I would say, I tend to think 500-700 companies. The 3,000 includes a lot of non-smart building or energy management solutions. It's just technology to operate commercial real estate.
Yeah, exactly. I think the MIT Center for Real Estate, Steve Weichel, and those guys probably track about 8,000, right? And if you expand it beyond our asset classes, right? Yeah. So if you expand it beyond where we were focused, then it becomes even bigger.
So, I mean, we see the fragmentation a lot, and I see that as a challenge across the board, right? It's a challenge because if you didn't have 3,000 companies to analyze, but instead had fewer companies to analyze, you could argue that gives you less work to do. You could say as a buyer, it's really confusing to figure out, maybe you're not looking at 3,000 companies because you might be looking for a very specific use case, but even there, dozens of companies, especially that you have to figure through. The sellers or the vendors of the solutions, they look at the market and say, wow, like we're competing against 50 companies that do just what we do. Or, we also have to go talk to all these smaller real estate companies, because even the biggest of biggest real estate companies are not that big in terms of overall penetration, right? It's not like going to the biggest grocery store and, they have a lot of the grocery stores as an example. So I'd be interested in just your perspective on, do you agree that the fragmentation kind of touches all in potentially a negative way, or creates some friction or some delay, thing that you felt like, it seems like Building Engines did kind of figure it out to some degree because you were able to scale and grow. So any just feedback or thoughts of just that fragmentation and just the state of the market, because it continues today.
Yeah, I think you've touched on what is probably the biggest challenge, on both sides, right? The buyers and the sellers. So, if you look at the market's fragmented itself, as we talked about. Asset classes vary tremendously in terms of how they operate, how they perceive value. I think real estate as a class, except for, very few exceptions, real estate companies are very decentralized in terms of how they operate. And incentive varies from market to market and property class to property class, even within the same organization. So it's super challenging. And then on the product front, if you think about how that applies to growing your business and thinking about how to scale and build plans and staff and what your goals are and how you facilitate growth in that environment, it's really challenging. And my perspective is we kind of brute forced our way through that, right? It was really just, well, although we had a great product, really well run, again, sales, marketing, execution was kind of how we did it, right? It was just digging into the weeds and the trenches and doing all the things. It was just classic sales, but it was brute forced, right, to be able to do it.
I'll pick up on that. That's an interesting approach, and maybe I'd be interested in a little more if you care to share detail, because when I look at companies, and there's probably a bunch of LinkedIn posts or articles in my newsletter to talk about this, but a lot of the challenge in our market, I think, and I'm thinking more energy and sustainability software versus the broad real estate tech. You look at the market and you say, okay, we have to raise a lot of money because we have to go spend a lot of money on sales and marketing, because our sales cycles are a year or more now. We're going to get them down to 3 months or 4 months. In reality, I think it's very difficult, given all the other dynamics in our market, to get a sales cycle down that dramatically. Maybe you can accelerate it, but a lot of times you could say that funding is maybe at the top of the funnel, right? Spend a lot at events, hire a lot of people to get the marketing message out, and then spend some money in bringing the accounts or the prospects through the funnel. But it doesn't, your funnel might get wider at the top. It doesn't necessarily get wider at the bottom. The reason I'm picking up on this is that you had noted you just didn't raise a lot of money. You were still able to grow successfully. And maybe my takeaway, you can correct me if I'm wrong, is that maybe it may have been more of a precise focus on actually working with the real accounts that are really viable leads and actually getting them over across the goal line. But I'd love for you to share a little bit there, because focusing on sales and marketing, I think, is absolutely right. Historically, that sometimes meant we just spent a lot of money on sales and marketing, but didn't see a lot of benefit.
Yeah, there's a few things in there, and we made plenty of mistakes along the way before we figured it out, including, candidly, after we, our PE sponsors came in, one of the first things we did was blow out our sales force and business development reps, and generated a tremendous amount of interest at the top of the funnel. But ultimately, we realized that was just a reaction to people dialing the phones all day long, right? And getting people to agree to anything to get you off the phone, as opposed to really thinking carefully and strategically about who our ideal customer was, what the value was that we could deliver, what the unit economics were that were important for the customer and for us, to make sure we had a successful business and they had good outcomes. So, and that just involved hard work and understanding the real estate, our target customers' organizations really, really well, whether they were third-party managed. And we did that some through things like master license agreements that made it very easy for us to sell. So we put structure in place around the agreement in terms of pricing, contracting process, and everything that just streamlined and made it easier for our salespeople to get deals through the funnel, knowing that even if we had to sell building by building, because every building is its own entity and LLC, even if they're managed by third party or operated, and the contracting can bog things down, if we could simplify that piece, we could accelerate growth and sales. It was thinking about things like that and executing well at that level that helped us accelerate growth, right, in doing that. So you can put those pieces in place, combined with the right leadership, the right incentive, the right kind of compensation plans for your sales team, and the right product. And if you're in a market where you have product market fit, there's definitely a need. You just work your way through it, right? And you can be efficient from a cost perspective in terms of not having to have huge teams. And we segmented our teams by enterprise, third-party management, mid-market, because we also understood within each of those in our definitions of the real estate markets we were going after that they were all unique. They were different. They were unique, and it varied even within those market by market could be different regionally. So some of this, again, I think is just good business practices, but have to have product fits.
Just to jump in there, were you as a business building engines, were you doing anything with JLL at the time?
It was, yeah, and it certainly fit into their strategic direction as an organization. I think they were very clear about, as they looked at their own business and who their competitors were, and everyone knows who their competitors were. And then you think about market cap and where valuations were for service companies as opposed to technology companies. They clearly had a strategic vision as to how they would change that, right, and where they could get better multiples on their business and better valuation through their use of technology. And they went all in on it, starting with, JLL Spark, right? On their Spark investment fund and grew from there into JLLT.
One question I was going to ask, Scott, so you had noted that you had a funnel from an M&A point of view, 3,000 companies, clearly looked at a lot of energy and IoT, smart building, sustainability software companies, right? So that was one of the categories you looked at from what you were telling us. But thoughts on just that market in general? Because when I talk to companies, and I work with a lot of course, I know a lot. I talk to investors who look at the space. So I've seen talk to a lot of owners and operators who use solutions. I think what's interesting is that the more seasoned users realize there's not a huge amount of companies. There may be some differences, but for any company you can identify, it's highly likely, and I'm not picking on any particular company, you can find at least one or two other companies that are almost the same or very similar or have parts of the company. You can say you're just like them, but you have this other capability set, feature set. Do you agree with that? Do you have any thoughts on that? Just it doesn't have to be this is what's wrong, this is what's right, as much as just observations on that market. I don't know that you made directly an acquisition in that space, which maybe just tell us, did it fit? Did it not fit? Were there challenges? That's just an interesting topic to dig into a little.
Certainly. So to begin with, I agree with the premise. Within the category, the biggest challenge for me personally, and then our team as we were looking at all these things, was understanding the distinction in the offerings from company to company. Even within there, it was always challenging for us to figure until we really got in the weeds with some companies, like what is software and what is services in these offerings? Like how much of this, because we were a SaaS company, we had clear direction from our PE sponsors in terms of the types of companies we could look at from a perspective of growth, operating margins, right? Profitability, things like that. So we had a narrow guardrails in terms of what we're looking at. And so once we get into things, we're like realizing, wow, the margins stink here because there's a lot of services on the back end that aren't really evident for the offerings, right? Until you start getting into it. So we really struggled there in terms of identifying that. And it was one of the challenging aspects for us in terms of honing in on an acquisition. We actually got close on a pure kind of sustainability company and product that I won't name, but our acquisition happened kind of at the same time, and that got put on the back burner. We did make one acquisition in a tangential space, which was an HVAC automation management company. Very small tuck-in acquisition that helped kind of extend the value of our preventive maintenance program to HVAC units in terms of aggregating information and getting better insight than we had that would lead to. But I do believe, one of the things we firmly believed is that building operations and facility management was sort of the foundation that was needed for true energy management and sustainability and decarbonization and all the trends we saw that were happening that we believed were important and would continue to be. And I still believe that today, despite some political climate challenges, I think, in terms of the importance of decarbonization. But we really did believe, it was a natural fit for us and for our business because all of that would translate into work that had to get done in the building that we manage. And even if it ultimately became automated, we would be the recipient and kind of the disbursement mechanism for data and information and insight.
And building on that, and something that I wanted to talk about, when I look now, there are companies that are, the different terms. I wrote up something over the summer in the newsletter and called them enterprise decarbonization analytics solutions, so EDA. But the idea of like a portfolio-wide solution that tells you you have 500 buildings. You might have more, you might have less. Here are the opportunities to decarbonize. And when you look at those solutions, and a lot of the companies doing this are very early, very small, 5, 10, 20 people. Those companies really weren't around 4 or 5 years ago, though the goal was there. When you look at them, a lot of what they're trying to do is figure out what is in your building. Chillers, what kind of chiller? Do you have pumps? Do you not have heat? How old are your air handlers? And not I'm just speaking HVAC because it is a big contributor. It's a big topic for us, Lewis and I, in our podcast, but you could say for anything, right? Do you have diesel generators, boilers? And being able to say, well, okay, let's build out a plan over the next, it's almost like the way I described it in the article, which I don't think I made this up, but a capital plan with a net zero or a decarbonization lens. So you think, well, okay, well, the companies that have a capital planning solution should be well positioned to add, okay, well, you just want to know, how do I manage and smooth out the costs over the next years? Or I want to upgrade the building in the next 3 years, I'm planning to sell it. Or I just bought the building and I need to upgrade it now because then by the time I sell the building, everything will still be modern enough that I can sell the building. You add the net zero lens, it makes perfect sense. It's not complete, solve for decarbonization, but it seems like that space is becoming more interesting. And more notably, the companies are realizing we need a little bit more data on the building. It's not just energy bills or utility bills. It's not just meter data. It's not even just BAS data. There's been a bunch of acquisitions that kind of support that thesis, but
yeah, that's one of the dirty little secrets, I think, of commercial real estate is that data isn't readily available. It doesn't exist. There are very few companies that have that level of capital planning information accessible and up to date. It existed in spreadsheets, and it might be in the chief engineer's office, and who knows when the last time it was updated and who else has access to it, right? And that's always been one of the problems with getting to the future, to the vision. So one of the reasons we made the acquisition we made was because they were aggregating that data. They had a really good system and process for aggregating at least the HVAC unit equipment data that we thought would help in that end. Even for our own customers with preventive maintenance, it's like we all knew if you're dependent upon the individual to update fields and forms in a software application and have that current and be readily available and accessible, it's not going to happen, right? So it's just never current and up to date. They're too busy. So the holy grail is getting to a place where that can be automated, right? Where you have network systems that have information available, essentially feed a central database or repository that can use that information for multiple purposes. And there are companies doing it in a number of different ways. There was, sensor companies and, plug-in software companies. Ultimately, you have to work with the big automation and controls companies as well. And, the good news is I think it's going to be easier to do it over the next few years. So that's good.
What about AI? What's your thoughts?
Well, I think that's how it's going to be easier to do it. And that's so great transition. And yeah.
Joe and I, we were just speaking to a couple of individuals about how they're building a business, which is going to be AI focused, kind of like they described it as a P plus type model. And it's all AI, AI technology first. It just sounds like that's definitely, we're not seeing many of those business models right now. And again, there probably is some, that's definitely the trend or definitely the way forward. Buying or working with service-based businesses and putting them into a tech-first approach.
And that approach was, let's go to the people who are servicing the building and give them the tools to do a better job of diagnosing and identifying and optimizing systems, rather than what's been happening in a lot of cases is we go to the building owner and say, we have a software solution. It will change how you do this one function. It'll be more data-driven. Oftentimes there, the answer you can get is, I'm too busy. I already have too many systems. I don't have time to go use something new, learn how to use it. But you go to a service provider who's rolling the truck to go fix HVAC controls, could be something on the electrical supply side, could be lighting. They might be more apt because they probably are taking longer than they'd like at each site to fix things. They probably have a shortage. They probably a shortage of staff, and then they have a long list of people to go. And also, you could argue if you're able to spend half as much time at every site fixing whatever needs to be fixed or repairing it before it breaks, overall, that should be a net benefit to how that business runs, because you're not necessarily going to go to somebody and say, oh, we were here for 30 minutes, not 2 hours. We'll charge you 1/4 of the price, right? You're still delivering the same value to that end building. And maybe you're delivering more value because no one's coming in the morning saying, wow, it's really uncomfortable in here. What's going on? It's like, oh, we fixed that problem yesterday. We anticipated it. So that's the difference. But I think that's part of probably why Lewis is asking about AI, where it has huge opportunity. Maybe it's not always been applied in the right way or to the right actual user.
Yeah, and I completely agree. That's where the opportunity is, and I think it's going to happen relatively quickly. Relative to the 20 years period we've been in, where everybody's building software solutions and struggling along. I think we are in this era of consolidation and simplification, right? And what AI is going to allow the ultimate customer to do is to build these models, right? To use the large language models, but fed with the data from all of those activities that you're talking about, right? Where they ultimately get the benefit of the work that's being performed, the data collection that multiple service providers are delivering, because it's their equipment, it's their information, it's their data. They should be able to get to do with it what they want, and create these high value databases essentially that allow them to finally get the insight, visibility, recommendations, actionable intelligence that everybody's been talking about for years is the holy grail, right? It's just, I don't want to look at a dashboard, just tell me what I have to do, right? Or just do it. Ultimately, it's just have the building do it, where we can get to this place of automation that everyone needs, because the things that work, they have to lower costs. Staffing is still a huge problem. There's not enough engineers with experience and maintenance guys to operate buildings and to do the things they have to do. And you just don't want that information residing in people's heads, which is where it is today. So,
Yeah, even on a clipboard, right?
or on a clipboard, which still happens, right? So it has to get to that point where that data is relatively accessible, and AI is, I think, the path forward. So that's exciting, despite all the pain and challenges we see.
Oh, I was just going to say real quick, like you've seen some companies say, like, we're not going to subscribe to our CRM anymore. We're just going to use AI and build our own homegrown CRM. Not a lot of examples of that, but a couple examples. I don't know that we'll get to a point where somebody says, I don't need a building automation system. I'll let AI, I'll build my own powered by AI, my own building automation system. But you could see that there are parts of our tech stack that maybe some more ambitious firms say, we can probably build something ourselves. And now there are tools out there that help us.
Almost 20 years with building engines alongside with JLLC. An interesting transition, leaving the business and then focusing on other areas. I think you've got a couple of things going on right now. Talk us through that.
Yeah, I stayed with building engines for a year, as we were required to do. The executive team was contractually required to stay for a year, which was great. It was actually a terrific experience. It was wonderful, great people at JLL. I worked with some really good folks. I learned a lot in that year period. In a big company environment, we did some really interesting things, working with their global alliances team, Spark team, their corporate entities. So it was fun to do. But the year was the right period for me. I left in 22 because I kind of knew that that was enough, and I wanted to go on and do some other things. But since then, I guess I'm semi-retired. I have a lot of hobbies which keep me busy, which is great. I just had a non-compete expire, which was kind of limiting in terms of what I could do in PropTech. Although I do advise a couple of PropTech companies formally. I'm also a member of Launchpad Venture Group here in Boston, which is an angel investment group, which has been terrific, really exciting. We focus on sort of New England, although we expanded to New York now, based on software startups. There's a lot of med tech and biotech, so it's great to kind of be looking at things outside of PropTech finally, and just a terrific group. There's about 175 entrepreneurs who make up the group of members there, so that's really good. Keeps me busy. And then I have conversations all the time. Kind of interested past an operating role. I'm not interested in doing that, but I love advisory work or being on advisory boards. So I'm always looking at growth stage companies, young founders who just kind of might need some guidance in terms of the areas that I have most of my experience in and can be helpful. Working with boards, that kind of thing as well. So yeah.
Excellent. Are there, I guess, last question on that topic, any subject matter or opportunities in the market in particular where you think, man, if somebody's working on something doing X or Y or a team, I'd love to talk to them? Or from your point of view, is it a little more open-ended? You have a lot of experience in PropTech, obviously. Anything PropTech, if reach out and get in touch with Scott.
Yeah, I think anything PropTech related, certainly I would be most helpful in the areas that I spend most of my time in, which is go to market, sales, marketing, positioning, branding of companies, as well as the M&A stuff we talked about. And then, the market segments where I've been helpful certainly can be helpful is in commercial, office, industrial, retail, although we had a tremendous amount of multifamily just as part of our customers' portfolios, right? Diversified portfolios. So certainly understand the dynamics there. Again, it's more open-ended. I've had conversations with people in spaces where I didn't necessarily think I could be helpful that have been that have worked out pretty well. So I think a lot of what I've done is transferable to those situations.
Nice. And just final point for me, going back just a little bit. How long did it take in terms of the cycle to get acquired by JLLC?
It was a year-long process. It was a just about a full year. We started right at the beginning of 2021. We sold in November of 21. We probably did a little bit of work just internally, discussions with the board and our PE sponsors prior to entering the year, but we hired the banker, got our SIM together, did all that kind of stuff. We're up and running in the spring, managed process with multiple rounds of interest, leading to the final decision.
I mean, just obviously impressive for so many other elements, but doing that during / at the back end of COVID I can't think of many other businesses that have gone through that, especially being acquired by such a big firm in the industry.
Obviously, the benefit of hindsight. Great experience, tremendous amount of fun. We're getting together, a bunch of the old folks who helped grow the company. We're meeting in a couple of days for holiday drinks. We get together every once in a while and celebrate and stay in touch. And there's still a few people still at JLL that we stay in touch with, and we all kind of get together, have a good smile, and reminisce and feel good about what we did. So it's a good story.
Yeah, a lot of people still in Boston, so it's just easy to see each other, which is nice.
Nice. Well, Scott, really appreciate your time. It was such an interesting experience, even for ourselves learning. I know you and Joe go way back, but really deep diving your background. I think it's fair to say you don't have to come across people that have been in the same business for 10 years these days, let alone 17, and then to have such a successful outcome being acquired by JLLT.
Thank you. My pleasure.
Yeah, thank you, Scott.
Thanks for your time. Cheers.